Matt Blair, co-founder and COO of REI Capital Growth, a company democratizing the financial benefits of direct commercial real estate ownership. Matt has spent the last 15 years of his career at the intersection of finance and real estate and recently completed his Wharton MBA. Matt, welcome to the Epic Human Podcast.
Thank you very much for having me. I really appreciate the invite.
My pleasure. You know where to find me. We should call out the elephant in the room and that Matt and I share a last name because we are, in fact, brothers, although we may not look like it to some people. But it's a joy to have you on the podcast. And when I first started this podcast, it never even occurred to me that I'd get the chance to interview my brother. So this is a very special day for me.
Yeah, well, it's a special day for me as well. I always wanted to ask you, why did you name it the Epic Human Podcast?
Oh, man, coming out with the tough questions right away.
Yeah.
Well, you know the backstory of how I started this podcast based on a conversation that I had with our grandmother, Eileen Blair. And it was the observation that everyone, including someone like her, grew up on dirt floors and, didn't have much to eat and had to beg for clothing and shoes and things like that, has an incredible story to tell, an epic story to tell, and is on their own hero's journey. And so over the years, what I found is that there are epic humans all around us that we pass on the street every day, but we don't necessarily hear their stories. So, and then in the course of what I do as a VC investor and entrepreneur, I get to meet amazing people like yourselves that have a vision for not only overcoming obstacles, but also changing the future with technology and business innovation. So that's the story of why I named it the Epic Human Podcast.
Wow, gotcha. Well, I thought it might have been because we just watched Last of the Mohegans too many times as kids. And because I was always looking for, an epic playlist to go to the gym. And I thought maybe there was something in our childhood deeply embedded that connected those two things, but probably not.
Well, maybe subconsciously. Maybe you're getting to the root of it all. Well, Matt, a real pleasure to have you. To get started, why don't you tell us about REI Capital Growth and why you decided to co-found this company?
Yeah. So REI, like you said, we're trying to democratize the financial benefits of long-term direct real estate ownership. It's our belief, and is part of our family story, that commercial real estate can really change a family's trajectory. And we believe that the first step to financial freedom starts with real estate, whether it's your home or whether it's an investment property. We think everybody should have the access to participate in the real estate world. From a financial perspective, we believe that commercial real estate is a better investment than a rental property, but the barrier to entry in just the dollar amount you need to get started is so much higher. So it's a very big hurdle for the average investor to clear. So our goal was to bring all of the benefits of direct ownership to small balance investors at a very, very low dollar entry point. So our fund allows investors to participate for as low as $500 for their first investment, and then they can reinvest for $10 after they've done their initial investment. So, we think that that's very accessible. And once the fund is launched, we have dreams of lowering that initial investment amount so that we could even spread this product further.
Wow. Well, and that definitely sounds like a compelling vision. How do you execute on that? And what have historically been the barriers that have kept out these smaller investors? Maybe you could just kind of help us understand that.
Yeah. So the commercial real estate world is it's a deeply entrenched world with the status quo, because most real estate sponsors, which are people that organize deals, they look to raise capital from a small number of large balance investors, mainly just because that's easier, right? If I get 5 guys that can each put in $1 million or $5 million, then I could go out and buy a $25 million to $100 million property, right? So being able to raise capital from a few number of people is just way easier than going out and raising a small amount of money from a large number of people. But it's hard to say why we wanted to go down this path, because it definitely is the more difficult path. But really, we were looking for an investment product that filled our investment objectives personally, and we couldn't find one. So we decided to go out and build it. And then we realized while we were in the process of building it, how many people would never have access to this type of investment product. So then we started to focus on how do we democratize it and how do we spread it to as many people as we can. And the devil is in the details. It's been a pretty complex process to get regulatory approval so that we can accept small balance investors that are non-accredited, and building our own technology platform to accept those investors and manage the real estate and manage the all the different nuances with the regulatory and the financial and accounting pieces that we have to put together. It's been quite the hill to climb.
I see. And tell us more about the regulatory environment that you're dealing with. Because I know there are certain rules about accredited investors. It sounds like there have been some changes in regulations over the past couple of years that have kind of unlocked this opportunity, and maybe you could expand on that.
Yeah. So this type of real estate investment really has not been possible for very long, because you can't really make this work without a very broad distribution of the internet. And now that there are actually more smartphones than there are people in the world, pretty much everyone has a smartphone. So that gives everyone the opportunity to invest directly through their phone. So that's really only about 10 years old. What is also about 10 years old is the Jobs Act, which was passed under President Obama. And the Jobs Act allows private issuers, so private companies, to register with the SEC in order to accept unaccredited investors. So typically the way it works is that a company will go public and they're required to file with the SEC and maintain certain audited financials, and they're required to maintain certain regulatory standards in order for the government to feel comfortable that they can distribute their shares to unaccredited investors. With the Jobs Act, they are allowing private companies to go through that same process to accept unaccredited investors, but the shares of the company are not necessarily publicly traded. And they call it a mini IPO because it's slightly less onerous than an IPO. And it allows companies to go out and raise money directly from the public. So the mass adoption of smartphones and the internet being distributed very broadly across the world, and the Jobs Act, those two things give us the opportunity to be able to share this great product.
I see. And is this tell me about the investors or the kind of customers that you'll be serving? Are these US based investors? Are these international? And how do you reach such a large volume of potential candidates?
So the way that we've structured this is we can accept any investors anywhere in the world. So anybody can invest in this directly through our website and with our mobile application. Initially, we believe that the reach is going to be relatively small because we're a small company that's trying to get the word out. But the way that we've structured our company is that it's going to be an open-end, evergreen real estate fund, which means the fund goes on forever. So because of that, we can accept new investors on an annual basis, and we can constantly grow our fund bigger and bigger and bigger as we reach more and more people. And the more people that learn about this, the more people will understand that the product that we've built is actually a great financial tool for their investment portfolio.
I see. And will and they don't have to be accredited investors, to be clear.
No.
And you mentioned earlier, kind of the SEC regulation of this idea of a mini IPO. Does that mean that the hold period for the investors will be shorter than a typical commercial real estate investment? Am I getting that right?
Yeah. Yes. Yes. So typical real estate investments are basically a glorified fix and flip. A real estate sponsor will find a deal where they can add a good amount of value. They'll raise capital. They'll buy the deal. They'll buy the property. They'll add value to the property, and then they'll sell the property. And that usually takes 5 to 10 years, roughly. And now your money is locked up until they're able to sell the property. But what we're doing is we're raising a small amount of money from a large number of people, and we're buying stabilized properties. So we're buying properties that are already cash flowing. So we're not looking to add value and sell the property in a short period of time. We're looking to operate, and then we're going to take all of that cash flow and reinvest it into more properties, which creates a compounding effect. So we're constantly reinvesting all of the profits off of our properties in order to buy more properties, which gives us more cash flow, which allows us to buy more properties. And that compounding effect accelerates over time. So the longer a investor holds their investment with us, the faster it'll grow, and eventually it'll be doubling annually, quarterly, monthly. I mean, the compounding effect really accelerates once you get out to, 20 years. So if you were to hold this in a retirement account, there's an explosive growth as you get ready to retire, which is, really exciting. But to your original point, there's an 18-month holding period for investors. So they buy in, we have 18 months to put their money to work, and then they would be able to liquidate their shares with us at the end of those 18 months.
I see. And what are the characteristics of a property, a real estate property, and caveating this with the fact that I know very little about real estate, as many of our listeners are probably in the same situation. What makes for a ideal commercial real estate investment property?
So it depends on a lot of different factors. Everybody thought office was a great real estate investment, and then COVID hit, right? And they call that a black swan event that completely changed the landscape of an entire asset class, which is office. A lot of people thought that Amazon was going to totally destroy the retail industry, and that actually has not come to fruition. A lot of people believe that multifamily, so apartment buildings, is the best investment class within commercial real estate because people always need a place to live. But on the flip side, there's a lot of problems when you're renting to people, and it's hard to do. It's really hard. So each asset class comes with its own pros and cons and its own different attributes that you want to analyze. The asset class that we like is multi-tenant neighborhood retail that's grocery anchored. So you think your local grocery store plus the Verizon store plus the dog groomer plus the barber, right? Places that people go every day. And so when we're evaluating those properties, we look at a variety of different things. We look at the labor market. We look at demographics. We look at the traffic counts around the area, how many people are driving by on an annual basis or a daily basis. We look at what businesses are opening and closing. We look at the demand drivers of the local economy. So really what you're trying to do is you're trying to evaluate whether or not people are going to continuously utilize those properties and whether or not tenants are going to be interested in renting that space. So there's a lot of different factors that you need to analyze, and it gets very complicated very quickly. And the big professional commercial real estate investors, they have a laundry list of things that they look at. Everything that you could possibly think of, they're looking at it, they're thinking about it, and analyzing it.
Gotcha. And um, how do interest rates, inflation, um, and the current environment, not environmental, economic environment kind of play into why now is the right time for a product like this?
There's a lot there. So the economic environment, you have to look at the fact that the U.S. government has printed however many trillions of dollars over the past decade, and that causes a tremendous amount of inflation. And the value of your dollars have gone down. And I don't believe that that is really in dispute. But the nice thing with real estate is that it has an inflationary hedge in that when prices go up, so does the rent that you are able to charge the tenants. So if Starbucks is now they're charging, $5 a coffee instead of $4 a coffee, it's 25% increase in their cost of the cup of coffee. If I own the building that the Starbucks rents, I'm going to raise the rent on the Starbucks when their lease comes up. Now, you have to be careful that you don't scare away your tenants, because if you raise the rent too much, they may leave. But owning an asset in an inflationary world is one of the best things that you can do. And that's one of the core reasons we believe that real estate is the first step to financial freedom, because now you own an asset that produces cash flow, that appreciates in value naturally. And when there's inflation, there's a natural hedge built into the asset that allows you to protect your investment with just the increase in rents from your tenants. And then the last point is interest rates. So interest rates have been so low for so long that I think a lot of people wanted to borrow as much as they possibly could, because they thought interest rates were going to go up. So they maximized as much as they could borrow, 85, 90% in some cases. The problem is that when they bought the property, they were projecting that rents were going to continue to go up. So a lot of borrowers were buying properties at very high loan to value. They took out a very large mortgage against their properties with the belief that the value of the property was going to continue to go up. And now that interest rates have gone up, they don't have the ability to refinance the debt, and the prices that they were anticipating have not grown. So that puts them in a position where their property is overvalued, their debt is coming due, and they're going to either have to raise more equity or they're going to have to take a big loss. So I believe that this is a great time to buy commercial real estate because prices are coming down from their peak. Debt is more expensive, but we are planning on having very conservative levels of debt on all our properties, which means you put in more equity, and that means that your overall return is slightly less, but your asset is safe. So we believe it's a great time. We believe there's going to be a ton of opportunity in the market in the next few years. And in addition, the way that our fund is structured, because we're constantly reinvesting the profits, we're going to be buying properties in down markets, and we're going to be buying properties in up markets. So we're going to be a constant buyer, which means we're going to buy tremendously great deals when the market's down, and we'll buy decently good deals when the market's up. But that'll average out where we're just going to have amazing returns in this fund because we're not trying to time the market. And I think anybody who has a sense of financing or financial investing knows you never try to time the market because you'll always lose. So we think there's a lot of factors that make this a great time to invest, and our product captures a lot of those benefits.
I see. Makes a lot of sense. So paint me a picture, because I'm trying to think about how scalable this is. Paint me a picture. In 10 years, where do you see REI Capital Growth?
So with the SEC registration that we discussed earlier, the mini IPO, we can raise $75 million every 12 months. So if we raise $75 million and then leverage that 2-to-1, let's say, for easy math, then we would be able to buy roughly $225 million of real estate, hypothetically, in the first year. Now, if we do that for 7 years, then we're going to have $1 billion in assets under management by the end of the 7th year. And actually, if we just do a 1-to-1 ratio, so we're buying $150 million of real estate a year, then we'll have $1 billion in assets under management by the end of year 7. So we're trying to scale this up in a big way, but that's just direct capital raising. The other exciting thing is that we can file simultaneous exemption with the SEC that allows us to raise money from accredited investors, and that doesn't count against the 75 million. So if we start raising money from accredited investors who want to participate as well, now we can grow even faster. And the exciting thing is that this thing just builds on itself and builds on itself and builds on itself. So once we get it off the ground, it's going to start to accelerate and accelerate and accelerate. It's like the little engine that could, it starts out real slow and then it starts moving a little faster and a little faster and a little faster. And before you know it, it's over the mountain and it brings all the boys and girls their treats and their toys. My son has that book and he loves it, so I read it a lot. Sorry.
I know it well. That's a good one. Want to shift the conversation a bit more towards you, but sort of as a transition question. You mentioned that real estate is kind of a part of our family history, and of course, I know the story, but I'd love for you to share a little bit about the story about how kind of real estate is connected to our family and our history.
Yeah. So where to begin? So the story begins with my grandmother, who was born in Jamaica, and she had married my grandfather, and she taught herself shorthand, and she moved to America and got a job as a secretary. And she made enough money to bring my grandfather and our uncle to America. Our grandfather got a job as I believe he was a janitor at a hospital. And he liked to tinker with different machines, radios, washing machines is ultimately what he got very good at. And he started buying up washing machines and leasing them out and taking the money from the washing machines and buying more washing machines and buying more washing machines and buying more washing machines. And he built a pretty large business of washing machines. And then he converted that into apartment buildings in New York City. And he had, I believe it was 2 apartment buildings in New York City, in the Bronx. And, it's a really amazing story when you think about where they came from. I mean, you mentioned Mama, Eileen, growing up on dirt floors, begging for clothes, and then coming to America and achieving that American dream they were the hardest working people I've ever met, and probably the most frugal people I've ever met as well. And they were able to go from nothing, literally nothing, to owning a piece of the American dream and owning these apartment buildings in the Bronx. And I think that that is a story that people can really that can really inspire a lot of people. I think that's an epic story, to be honest. And that dream isn't dead. I tend to believe that a lot of people think that the American dream is dead, but it's not. It's just everybody's out trying to achieve their American dream, and not many people are trying to deliver that American dream to other people. And I think we've been very blessed in this life. So, that's what I'm trying to do. I'm trying to give people an avenue to achieve their American dream, which is ultimately their financial freedom.
Well said. Well said. Tell the story much better than me. So I appreciate that. Let's shift to you. And this is a question I ask everybody. It'll be interesting to hear your response, but just tell me about what life was like growing up for you. What was it like growing up for you in Connecticut? What did you struggle with growing up? Just tell me about the early years.
Yeah. I had a great childhood. We lived not exactly out in the woods, but we lived in a really rural area. And the thing that I remember most from childhood was just, kind of throwing on your sneakers, running out the back door and just like running into the woods and, picking up sticks and, pretending they were guns, and we had to fight the Nazis, and we're just running around, kind of creating havoc out in the woods. And, it was just, it was a lot of fun. I think we had a really great childhood. I was not the best student in the world. I was not terribly motivated by schoolwork. But I think I've done decently well since then. I was really just so happy to kind of be around, our family. We went to, Nan's every weekend for pizza. I think that was really a blessing. Now that our family lives so much farther apart, going back and thinking about having pizza every weekend at Nan's is a really, it's a special thing a special memory. It was a nice childhood. The one thing that I think about is, money was always a pain point, right? We lived in Connecticut. Connecticut was very expensive. And we were surrounded by such immense wealth. And, we didn't really feel like part of the club. Our parents grew up in the Bronx. And, I think that was probably the hardest part, but ultimately, I think having a little chip on your shoulder, being able to be frugal when you need to be is a great skill that's come in handy in my life. But overall, I feel like we had a great childhood.
You talk about the influence that our extended family and grandparents had on us because we had so much exposure to them. You mentioned we spent a lot of time with one set of grandparents on weekends, and the other set of grandparents actually lived with us for a number of years. What do you remember from any of our grandparents that either they said or their influence on you, or a story that you remember fondly or you think about regularly?
There's many. So our grandfather on our mom's side, he was a mason. He had this old green truck that he used for work. And we used to play in the back of that. He'd pull it out in the driveway and we'd all climb all over it and play. And, we'd play in that truck. And that's a fond memory for me. He always used to take the slice of pizza that had the biggest bubble on it. And he was a great man whose body was breaking down at the end because he was a mason. So he was picking up heavy stones his entire life. His hands were like catcher's mitts. And I feel like at the end, there was just so much pain there that it's hard to watch towards the end, but I just remember him being so big and so strong, right? Even when we were got older. He was just so tough to the end. And I think about Mama on Dad's side. When I was working in New York, as I was working for an investment bank as my first job, and I was working in New York, and she just started calling me at like 8 p.m. on like a Tuesday, and I'd still be in the office, but I'd be waiting for somebody to send me something, so I'd have 20 or 30 minutes to kill, and we would just talk, and it was just like a really nice thing, because I didn't have as much of a relationship with her as you did, because when they lived with us, I was a baby. Like I don't really remember that. So I didn't have as much of a relationship with them as you did. And she just started calling me, and I had the time, and we would chat. We would chat for a bit, and some of those conversations are just so funny. She would have me dying laughing. But yeah, those are some of the ones I think about more regularly.
Yeah, a lot of fond memories to pull from.
Yeah.
You mentioned Wall Street, and I wanted to ask you about that. So you graduated with a finance degree from Lehigh, decided to go to Wall Street. What inspired that decision, and how did that experience kind of color where you went from there?
So I really didn't know what I wanted to do, and I remembered how difficult of a conversation money was, growing up for a lot of different things. So I just said, I want to make as much money as I can. And so I studied finance, and I, went to get a job on Wall Street. Right. I ended up working for an investment bank. I was not doing investment banking. It was, I kind of just got lucky. I graduated without a job, and I found a job in 2010. And what we were doing was we were actually selling distressed real estate loans for banks that had overlent to overly risky properties and didn't have any real recourse to get their money back from the borrowers. So they had to sell the debt to these private equity companies who were buying up millions upon millions of dollars of debt at huge discounts and making a killing by foreclosing on the properties, fixing them up, and reselling them. And, it really taught me about, number one, over leverage, right? And being overly speculative about the potential upside of a property. And it really taught me, how debt math works. And that is really at the core of commercial real estate, right? Commercial real estate is cash in, cash out, and how do I make a profit? So if you understand the debt math, that's that is a very, very big part of the puzzle. And I don't think a lot of people really understand it that well, because they make it complicated for a reason. So that's where I started in my career. And then I got really burned out on that, working 80-hour weeks was intense. So my company got purchased by another company, and it was a good opportunity for me to part ways. So I left after 2 years, and I was listless. I didn't know where I was going because I was so burnt out. I did not make as much money as I thought I was supposed to make, which was a bit of a gut check. And I didn't know where I was going from then. And then I had this great older brother who gave me a car. And that allowed me to move to Colorado and achieve my dream of being a ski bum.
Say more about that. Because I think a lot of people dream of quitting their job and moving to Colorado and being a ski instructor or a lifty. So tell me, what was that sabbatical, let's call it, like for you?
That's generous, very generous. So I have this very intense memory of first getting to Colorado. I moved out there with a friend, and we caravanned out there the whole way. And we got to Denver late, 10, 11 o'clock, real cloudy night. And so, we pull in, we're staying with a friend of ours. And the next morning we wake up and we go down to the car, and our friend who lives there is like, come here. And he pulls us to the corner of the building, and he just points around the corner at the Rocky Mountains. And man, that, like, they weren't there all day the day before, and then they were there. And I remember that had such a huge impact on me because they're just so immense, and they're really, majestic. So that was my first, experience in Colorado, and I love Colorado. I tend to go back every year. I have some friends that live in Denver. I still have some friends that live out in Breckenridge, which is ultimately where I spent the winter. But being a ski bum is not a lot of fun. They barely pay you anything. I ended up being so tired that I didn't even want to ski on my days off, which was kind of the whole point. You basically just shovel a lot of snow, depending on what job you have. And I'll say I loved living in Colorado, but using your body as your means of making money is really hard. And I have a tremendous respect for people that do that day in and day out. But I am blessed with the ability to use my mind to make money. And so I felt like I kind of had to do that after shoveling snow for 6 months.
So in other words, it cured you of that fantasy pretty quickly.
It did. It did. I got a healthy dose of reality very quickly. And so I was a ski instructor as well as a lift operator. And I cleaned dishes, but I have a very vivid memory of, being a ski instructor. I was a ski instructor for adult first time skiers. And it was the coldest day I have ever experienced. It was like -23, like with a wind chill. Like, it was so cold, and they give you great gear, right? Because you're outside all day. And I was so unbelievably cold, but the people I was giving a lesson to were a bigger couple from Texas, that was falling down every 2 or 3 feet. So it was fall down, get up, fall down, get up. So they were warm because they were just expending so much energy. And I'm just standing there getting blasted by the wind. And I was like, I don't remember if that was the day where I realized, like, this is not all it's cracked out to be. But that day was really etched in my mind. But overall, I had such a great time. But, I'd love to go back. It's really hard to make it a full-time gig. And the people that do, God bless them, but it's hard.
I love that story. And I tell kind of this story to some folks that I run into, especially younger folks who are like, I'm burnt out. I don't like this corporate rat race, and maybe I'll just go to this deserted island, or I'll go to, to this ski resort, and I'll just make it work and live my life and have fun and, no stress. But then, for the people who actually go and do it, sometimes it's like it's a reality check. It's like, hey, this is not what I thought it was going to be. And so it sounds like from there, you eventually found your way back into the finance and the real estate world, actually coming back to similar to your roots at KBW. So maybe you could just give us a quick overview of that part of your career prior to REI Growth, and kind of what you learned that helped inform your decision to help start this company.
Yeah. So I took a stop in San Francisco. So after Colorado, I went out to San Francisco. I had a great friend who let me sleep on his couch for a few months. And I got a job in e-commerce. So there's the Amazon of, I believe it's Japan, is called Rakuten. And I worked for an American company that did affiliate marketing for them, which is basically pay for conversion. So if I put out a affiliate link and somebody buys my product through an affiliate link, I will pay that affiliate. So I was I was doing data analysis for this e-commerce company, and I realized I was doing all of the same analysis as I was doing before on Wall Street, and I was basically just getting paid less to do the same job. And I was on the West Coast, and I didn't have any family or friends. I had 2 friends there, and I kind of realized, number one, it's great to be closer to family, and number 2, if I'm going to be doing this job anyway, and I don't love analysis, so why not do the analysis on the data that gives me the most money as an analyst? So my thought process was, I'll get back to New York, I'll jump back in to the investment banking world, into the real estate world. I'll find something. So I was reaching out to my old colleagues, and 2 of them had moved over to a new company that does real estate valuation for CMBS, commercial mortgage-backed security offerings. And there was a small group within that company that did consulting work. So I basically became an advisor or a consultant to the debt world, to the lending world. And we quickly got into the world of doing regulatory remediation. So these big banks, they have hundreds of thousands of loans. And if there's a problem with the way that they are tracking data or collecting data or reporting data to the government, they have to fix it on their entire loan portfolio. So we ended up in that world of helping banks remediate those issues. So we looked at hundreds of thousands of loans, from residential to C&I, which are basically business loans, to real estate loans, to the largest real estate syndication deals you can do. I've seen all of the debt basically in the market. And I did that. That was the majority of my career. I spent roughly 10 years doing that type of work. And I saw how much money, real estate sponsors get to make when they are the ones organizing the deal and raising the capital and operating the property and then selling the property. And there's just so much money floating around. And it's a big club. And if you're in the club, you're in. And if you're not in the club, you're out. And I tried to get in the club, frankly. And it's really hard to get in. It's really hard to get in. And I kind of came to the realization with my business partner, who's our father, that there's enough money out there for us to go and execute on deals without having to go and grovel to the big institutional money centers, to the big family offices that, that have all of the people that they invest with already. So instead of going and trying to do what everybody else is doing, we decided that let's take the road less traveled and let's deliver what we believe is a benefit that everyone should have access to, because there's just so much money in the financial system that everybody in this country and a large percentage of the people in the world can participate at a very small amount, and it'll change their life forever. And there's plenty of profit to go around. You just have to organize the people. We have to bring people together, show them that this product exists, pool capital so that we have enough capital to play at the higher levels. And then, we can all win together. And that's a really exciting mission. And honestly, analyzing millions and billions of dollars of debt, it's exciting when you first do it. You're like, wow, this is $1 billion credit facility. But then, you kind of get desensitized when you're like $10 million loan, like I'll pass that off to somebody else. And it's like $10 million is an obnoxiously large amount of money. So I was getting a little desensitized. I wasn't terribly excited about, analyzing these big credit facilities so much anymore. And I wanted to do something that really got me excited. And building a new product is really hard, but it's exciting because, there's potential that you have yet to uncover. And it's nice to the idea of not being beholden to some corporation, nameless, faceless corporation, is appealing to me. But I will basically be beholden to my investors. And if I can create long-term value for them, then that's a beautiful thing. So that's kind of my journey of how I got here. And, I hope that, we can successfully launch this business, and that people are as excited about it as I am, and that we can deliver long-term value creation for thousands and thousands of people.
It's interesting in hearing you tell your story at how your experience in finance, in real estate, analyzing an untold millions of loans, understanding regulatory compliance, and even, your brief stint in the Bay Area doing marketing, affiliate marketing. It kind of, all those disparate experiences actually come together to make you probably one of the ideal founders of this specific company. So, and not to mention the Wharton MBA. Just while we're on that topic, the Wharton program is one of the best respected and prestigious in the world. And you went through it during COVID. Would love to hear just, some of your insights having just gone through that very rigorous program.
Yeah. So we were scheduled to start in May of 2020. And I did the executive MBA with Wharton, which meant I kept my job and I did the program on the weekends. So I live in Michigan. So I was basically signing up to go to Philly every other weekend for 2 years. What was it? March of 2020, COVID hits, everything shuts down. An executive MBA is the worst possible scenario for a pandemic. We're going to bring all these people from all across the country, put them in a room together for 2 days, and then send them home. So,
when you say it that way, yeah.
I understand. Yeah, I understand why we were not in person when we started the program. So they scrambled very quickly to set up online programming, which was a blessing and a curse. It's really hard to be on Zoom all day, as I'm sure many people remember. It's very hard to create relationships over Zoom with people that you've never met in person. But that's what we were all doing. That's what the world was doing at that time, right? So the nice thing was, we got through the core curriculum, and like you said, it was very rigorous. And I didn't have to travel on top of that, which was a huge blessing because I was able to just really focus on the work. And the big problem is you don't get the opportunity to create as deep of relationships because 2 years every other weekend is not a lot of time. So, and we were back on campus, full time by the end of the first year. So we got 1 full year of everybody on campus for a year, which was great. And, the school did everything that they could to try to make it as close to a regular experience as they could. But, we're always going to be the COVID class. And I was talking to someone in the alumni office, and she asked me what class I was. And so the way that they name the classes is based off of, what So they started the executive program, I don't know, in the 80s. So I was WEMBA, which is Wharton Executive MBA. I was WEMBA, 46 or something like that. And I couldn't remember if I was 45 or 46. And the woman in the alumni office was like, well, you can't be 45 because those guys are just pissed about COVID. And I was like, oh, yeah, that's definitely me. So, there were definitely people that were really upset about, the somewhat lesser experience. But, it's hard to fault the school, in my opinion, because of that. You bring all these people from different places, you put them in rooms, they all go drinking together. Like, good luck stopping that. And then they all go home. It's just like, it's a recipe for disaster. So it was an interesting experience. It's really hard to juggle all of it. I got married in the middle of it, and I had my first son 2 or 3 months after graduating, which I don't know how my classmates did it, having kids in the middle of the program, but very many of them did. My hat's off to them, because that would be very difficult. So it's an interesting program, and there's a lot of people that are just, real go-getters that go to that program because they do it all. They have kids, they have, family obligations, they have work, they have school, and they get it all done. And honestly, I don't know how I did it, and I don't know that I would sign up to do it again. But the people that you meet there they're just truly amazing people. And it's a tremendously strong alumni network. And, I'm really glad I did it. I'm not sure I would sign up to do it, especially through COVID again. But yeah, it was quite the experience.
The best experience you never want to do again. I think a lot of people would say that.
Yeah, honestly, that's kind of what I think about with college. Like, I loved college. College was awesome, but I'm good.
Yeah.
I don't want to go back to college.
I love that. Let's move to your personal philosophy. And you mentioned, you're a father now, now a father of 2 beautiful babies.
Yeah.
And congratulations. And
thank you very much.
How would you say becoming a parent has changed your outlook on life or your life's mission?
Being a father changes, I don't want to say everything about you, but it changes a lot. It's the hardest, best thing I've ever done. I love being a dad, but it's also really hard. It's really, really hard. There's no calling in sick. There's no, ignoring the baby when they're crying at 2 a.m. There's no giving up, right? So, it's nice to say, oh, Wall Street wasn't for me, and move on to Colorado, right? And oh, that didn't work out, and move on to the next thing. But being a dad is just forever, right? And that's the best part about it, right? Like, my son and my daughter will always be my son and my daughter, and I will always be there for them, right? But going through the experience of having kids, and my wife is a physician, she's a surgeon, and seeing how much time she gets off. And at the time my son was born, I didn't really get any time off. I brought my laptop to the hospital, and I was working in my wife's office while my wife and son napped. So seeing how much time my wife got off, which is her role is a little different than what I was doing at the time. She got 12 weeks, which in the medical world is amazing, which is shocking to me. because she had a friend who works in OBGYN, and that she only got 6 weeks. And I said, but she works in OBGYN. Like, don't they know that you need more time with the baby? And it's, there is such a crazy demand on doctors that they really don't get much time with their babies right after they're born. And it's opened my eyes to what I think is a really big problem within this country, is that I don't think we value the family unit as much as we should. And I know that there are some companies out there, big tech companies that offer these amazing maternity leaves and paternity leaves. But that's the exception. That's not the norm, right? So a big mission for me is to be able to make it so that my wife doesn't have to work, because she has to take so much time away from our kids. And it's such a demanding role on her, and she takes it in stride. She is unbelievably amazing. But, there's something about, being a man where you want to do that for your wife. You want to take that burden. You want to give them time with the kids, but also you want your kids to, spend as much time with their mother as they can, because that's the best way for them to grow up developmentally. So a big piece of this is, okay, well, how do I deliver a better financial product to people that need it most, to the blue collar worker who's working 60, 70 hours a week, and, he's putting food on the table, and he can scrape, $100, $200, $500 a year and just put it into an investment. Well, okay, let's give him the safest, most reliable investment that's asset backed, that grows with an exponential function. Let's give them a product that works as hard for them as they work for their family. Because, I've worked harder in the past 2 years than I've ever worked in my life, because, you're working for something, right? You're working for your family. And people do that every day across the world. And a lot of them don't, at least this is my opinion, a lot of them don't really have a light at the end of the tunnel. They're just kind of barely scraping by, putting food on the table, right? So if I can give them a product that's $10 a month that they can invest, and they can, or $10 a year, right? And I can grow that money for them in a way that it gives them a little security in the future, that, hey, there is a light at the end of the tunnel. I think that that's the greatest thing I could do. So, as selfish as I am, trying to make it so my wife doesn't have to work, I want to spread financial security to as many people as I can, so that they can spend time with their kids, so that they can spend time with their wives, so that they are husbands, so that they can pass on a little nest egg to their kids. Because modern retirement is, save as much money as you can and then just deplete it to zero, and then you die, right? We have two products, one for growth, one for income. So people that are looking to leverage the wealth that they've built over a lifetime, they don't have to deplete it to zero. They can leverage it, and they have income. This is all about giving people better tools to live a life that they're happier with. And a lot of that stems from having kids and seeing, the burdens of modern existence in the United States is hard. Things are expensive, really expensive. Daycare is really expensive. And not working is even more expensive, right? So it's just, I find people, at least I believe people, are just in a terribly difficult situation. And if I can just do just a little bit to make it just a little bit better, then I'm doing something good in the world.
Is there a quote that you think about regularly?
Yeah, there's several. So I really like Jocko Willink's book about discipline equals freedom, right? I'm not sure exactly what the quote is, but like, the more disciplined you are, the more freedom you have. I have a quote actually on my phone that is similar. Discipline is choosing between what you want now and what you want most. Um, the work from home world has caused me to be way more disciplined because it's, getting up and going out into the world requires discipline, right? It just requires a routine. And then working from home, it's very easy to say, oh, well, why don't I make a breakfast? Why don't I clean this up? Why don't I, take the dog for a walk? And early on in COVID, it was very hard to build structure in an environment that you basically never get to leave, right? So I really dug into those discipline quotes and like motivational speeches about discipline. And I think that drives a lot of who I am as a person. And actually, it ultimately drives a lot of our investment methodology because we're not trying to hit home runs. That's not what we're trying to do. We're trying to hit a single every time we get up to bat, right? And it's not a quote, but it's an anecdote that Howard Marks discussed in one of his recent newsletters, where he said he was talking about money managers, mutual funds, and he said there was a mutual fund manager who was never in the upper quartile on any annual analysis of returns. He was always, 25 to 30% ranking on an annual basis. But if you look over a 20-year span, he was number 4. So he was never the best and he was never the worst, but he was wildly consistent. And the consistency is what delivered the best returns over the longest time. So, that's really what we're trying to do. We're trying to be very disciplined. We're trying to not take any big swings. We're just trying to be very deliberate. And discipline kind of drives a lot. And, the other big quote I think about a lot is from Charlie Munger, where he says, the real money is not in the buying or the selling, but in the waiting. And I believe the greatest investment tool in the world is just time, right? If you can put some money to work for 30 years, it's gonna move, whether it's in the stock market or whether it's in a real estate investment. You're going to have real wealth, in comparison to what you put in, if you give it the time it needs to grow. And if you couple that with a compounding investment, shameless self-promotion, but if you couple that with a asset-backed compounding investment strategy, I think, it could really change your world.
Yeah, it reminds me a little bit of the Moneyball strategy, right? Where it wasn't about getting the biggest hitters on your team. It was about getting the consistency, the discipline, the getting on base, and the accumulation of those small to medium wins over time result in massive success.
Absolutely. And then when you pair that, more shameless self-promotion, but when you pair that with the tax structure, the leverage structure, and just the intrinsic nature of commercial real estate, then you get to take advantage of those long-term benefits. It's small wins consistently. And then as the portfolio grows, now you have more options. You can 1031 exchange into a different or better property without any tax consequence. You can re-lever the properties at the new valuation. You can do so much over long periods of time when you own the property. And if you're just doing a fix and flip, a traditional private placement memorandum, you get all your money back and you pay all your taxes and then you have to do it again. So this is a long-term tax deferred strategy that allows people to grow without any tax consequence until they're ready to liquidate. And we're not ready today, but we will be ready in the very near future to accept retirement account investments. And then this is a perfect investment for a retirement account, because you just set it and forget it. And then 30 years later, boom, you're in a great spot.
What's something you believe that others or most people do not?
So I don't know how much people believe or don't believe this, but it's not something I hear anybody else talking about. But I think that we have an epidemic of sandwich shops making sandwiches too big to eat. And when you bite them,
what?
The meat comes out. And it's a travesty across the country. And in my opinion, is that sandwich construction is one of the most important metrics on how good a sandwich is going to be. Can I eat it without it falling apart in my hands? And I just don't think enough people take that into consideration when they're building their sandwiches for consumption.
I'll admit I did not see that one coming. You got me.
I tried.
Last question, kind of on your personal philosophy, which is what advice do you give to younger people? Let's say they're in college, they're coming out of college, maybe they're at their first job, they're thinking about a career in finance, maybe in real estate, maybe in entrepreneurship someday. What advice do you provide them? And kind of related, like what mistakes do you think they should try to avoid?
I try to tailor any advice that I give to the person and the situation that they're encountering, because everybody's situation is a little bit different. But a lot of the themes that run consistently across all of them are, work as absolutely hard as you can. There is definitely something about putting in as much as humanly possible, more than you think that you can accomplish. There are a lot of scenarios where there's a lot of stories in the world where people they work to the bone, and maybe they don't find success where they were targeting, but they find success in other places, and just maximum effort delivers results. Maybe not the results that you thought, but it delivers results one way or the other. So that's a piece of advice that I always give. The other thing that I think about and I talk to people about is, the only real certainty in life is that you're going to die, right? And 3 or 4 generations from now, or 2 generations probably, no one's really going to remember you, right? There are some people that will be remembered, right? There's a very good chance that it's not going to be me and it's not going to be you. So what are you afraid of, right? You're afraid that, people are going to think you're kooky or think that your idea is bad, or people think you're overly ambitious, or, who cares what people think? You have to go after what you want in life, because nobody's going to give it to you. And there's no reason not to try and to go after it with everything you got, because, you got one chance, and, no one's going to remember what you said that one time at that one party, or none of your professors are going to remember you if you take a huge swing and you lose a bunch of money. No one's going to remember those things. But you'll remember, your family will remember how you approach life, how you, the things that you took on. And so I try to encourage people to kind of go after their dreams, because all of the reasons not to do it are superficial, I guess you could say. Maybe just not that important. So work hard and just go for it.
Yeah. On your second point, I sometimes ask people, what do you know about the former U.S. president, President Garfield? No one
Yeah.
knows a thing about
He
him.
he was an orange cat and he had this crazy dog as a sidekick.
But it's
no, that's a good
it's
point.
the analogy because at that point, and you can name we could name probably a dozen or two U.S. presidents who were at their time one of, if not the most important person in the world, and they're sort of forgotten to history, even them, right? So it
Yeah.
sort of reinforces your point around, every single person who, is a doubter of yours, is a, someone who's negative about you, doesn't like you. They're all going to be dead in 100 years. And so are we. So, living life without fear is kind of a superpower if, to the extent you can maintain that mindset.
And I also find the majority of the reasons people don't go after their dreams is because what other people are going to think of them. Right? It's probably 75% of the objections that, I hear, what will my parents think? What will my teachers think? What will my friends think? And it's like probably half of them will think it's awesome, that you're going for it. And, the other piece of advice is, that, that this is not original to me, but it's fail fast, right? If you're going for something, go for it and move fast, break things and fail as quickly as you can, because then you'll find the right thing. So, I think, I try to give good advice, but, it's tough because everybody's a little different and, everybody needs to hear something a little different as well.
Yeah. That's funny. Yeah. It reminds me of the story when I was in business school. For one, it was a leadership development class, and the teacher had us all go around the room and give one piece of advice to like the rest of the class. And when it came to me, I said, be careful who you take advice from. and the teacher like just rolled his eyes, and everybody in the class started laughing. But the funny part is I was being 100% genuine, and I didn't even at the time like think like, oh, this is going to be a funny comment or something that's like ironic in the context. But it is true in that there's your point about being careful on giving advice is a good one, because oftentimes there's too much generic advice. There's too many people who want to give advice and want to be viewed as kind of mentors. But, and that's why I always say, get a lot of opinions. Like if you're about to make a hard decision, get as many opinions as you can, because you don't want to over-index on an opinion that's, let's say, closest to you or most accessible to you, when it may be exactly the wrong advice.
Yeah, that's a great point.
Any parting words you want to share, or anything you thought we would cover that you want to discuss?
I think that the world is changing a bit, and there's more opportunity than there's ever been for people to change their entire lives through working hard and investing in crypto. I'm just kidding. But no, I'm serious. I think that a lot of the status quo is being broken down right now in a lot of different ways across the country, across the world. And I think that creates opportunity for people. So, as much as there are newscasters and, personalities out there saying that, things are doomed and things are going to collapse, I think that there's still tremendous opportunity for everybody in the world. And you have to be positive. And even if things do go haywire, that'll create opportunity. So, you got to have positivity, and you have to work towards a better future, even if you don't necessarily think that that's in the cards at the moment. But I tend to think that there is.
Terrific. Matt, thank you for being on the podcast and kind of sharing a little bit more about your work and your experience and your philosophy. How can people find you, keep up with what you're doing at REI Capital Growth?
So we have the website, reicapitalgrowth.com. That's for our growth and equity product. We're also on Instagram, we're on Twitter, REI Capital, on most of those. You can find all of our social media links on the website. And I'm on LinkedIn, our whole team's on LinkedIn. You guys can get in touch with us. We all have Twitters as well. So, please reach out if you want to learn more. I feel like we even barely scratched the surface of all of the nuances of the products that we're creating. So, there's a lot more to learn about it. So please come to the website. We have a ton of information on there to teach people about what we're doing, and reach out. I'd love to talk about this more.
Excellent. Thank you, Matt, for being here, and I really enjoyed it. And I'm sure you'll have a number of people reaching out. So thanks again.
I hope so. Yeah, no, thank you so much. I really appreciate it. And see you at Thanksgiving.
All right. Thanks, Matt.